So today I'm going to talk about some of my worst stock market mistakes that I've made so far. Most of these mistakes are from when I first started out back in January 2018, and this is going to be more of a story time video as to why I actually made those mistakes in the first place, and hopefully this can help you to save some money as well. Hey guys, welcome back. My name is Faizi, and on this channel we look at stocks, investing, basically everything in personal finance. And today I'm going to show you what an idiot I was when I first started out in the stock market when I was just a teenager. This video is only part 1, which talks about the mistakes, and part 2 actually goes into the lessons that I've actually learned from this. So, as always guys, this is not financial advice, I'm just talking about my own personal experience. So in January 2018, I bought my first ever stock, and the reason why I started is because NAB Trade at the time was giving away $1,000 in free brokerage, which means that you can do around 66 trades without paying any cent in brokerage. Which of course sounds pretty awesome, so I bought my first ever stock, and my first ever stock was actually a NAB share. And the reason why I actually bought it was because that was the only thing I knew at the time. Back then I was working at NAB, and I looked around the office and thought to myself, okay, this is a pretty huge business that's fairly stable, it's got thousands of employees, and it's a major bank, so the chances of it actually failing are very, very slim compared to other businesses. And that was my thought process at the time. Now, of course, I looked at the share price graph on Google, as you do, typed in ASX NAB, and the graph itself wasn't particularly amazing, as you guys can see, but I was more interested in NAB's dividends because at the time they were paying a steady dividend of 99 cents for a few years. And I thought to myself, this could be a pretty good time to make some side money, make some, passive income, because based on the share price back then, the yield was like 6.5%, which definitely beats a savings account. So basically I bought 500 NAB shares, which was just under 15k back then, and I thought, wow, I'm gonna make $1,000 this year from dividends and passive income. And just the thought of that was just so good. But a few days later, the share price went up, and all of a sudden I could sell my shares for like $80 worth of profit, and I sold it and I thought, wow, I just made like 80 bucks in just 3 days, and I didn't even have to wait a whole half year or a whole year just to get the dividends. So there is mistake number 1, which is not really having a clear direction and just trying to make money at all costs, and not really understanding why you started in the first place and why you do the things that you do. I basically had this whole majestic plan in place where I'm gonna invest for at least a year and get those dividends, but I just threw everything away in like 3 days. Okay, so moving on with the story. So now I have tasted this sweet profit. I was so hooked and my plans completely changed. And I started to trade pretty regularly, especially because I had the free brokerage. And I thought to myself, why would I actually wait 6 months to get the dividend when I can just make that money in a few days just trading stocks, right? Like, how genius is that? So surprisingly, as a beginner, my trading was actually going pretty well. In fact, in the next 2 months following that, I made around 40 trades, mostly in Kogan, which was trading around $7 at the time, and a company called Wattle Health Australia, WHA, if anyone knows about the company. Now these were pretty tiny trades, less than $1,000 each, and somehow in the next 2 months of that time, I didn't make a single dollar of loss. And this was amazing because I thought I was some sort of a genius. And in that time period, I was making enough money to actually cover my commuting expenses to and from work, which was pretty cool. So in this time, I had this newfound confidence where instead of doing these tiny trade sizes, I was taking much bigger positions, as you guys can see. Now this is where things started to go wrong. So I already bought over 2,000 shares of Wattle, sold some, but then that day they announced some news which was actually negative news. So at the time the company had a pretty good run up, so I thought, okay, no big deal, it will surely rebound back. And this led to mistake number 2, which is double downing on a falling share without actually thinking about it too much. So I was so silly that I bought another $1,000 on the same day on the bad news, thinking it would be all good a week from then, which looking back at it now is so naive and just so plain stupid. And it just kept on falling, and a week later I was so stressed out, feeling like crap, and I sold the shares at a loss of 1.2k. So basically 2 months of those small profits that I was making was wiped out as soon as I sold, and I was at an overall loss in my portfolio of about 600 bucks. And this was all caused by mistake number 3, which is when you first start in the stock market and you get lucky, which is what actually happened to me, your emotions start to take over and greed comes into play. So you need to watch out for that, and you need to start thinking rationally, because if you're greedy, all you're thinking about is just the gains. By the way guys, if you've learned something so far, please leave a like or even subscribe. So after that monumental loss, I tried to play it safe, but I kept on trading still, and I was determined to make the money back. And back then I was regularly trading Kogan and Afterpay. Yes, Afterpay in 2018 when it was still so cheap. And I bought Amazon stock around that time as well at around 2000 USD per share. And I bought around 10 shares, so at the time it was around 30k Australian. And if you look at their share price graphs, all of these 3 shares had a bit of a dip around end of 2018. And around this time, my portfolio was in the worst position it had ever been in my whole investing journey. Because at the time, Kogan shares were down about 70% from their highs, Afterpay was also down 35%, and Amazon was down another 30%. So basically, all of my holdings were doing crap, and I was down 50% in my overall portfolio. So to put that in perspective for you guys, so you can understand my pain, the portfolio value was 60k, and now it was only worth around 30k at its worst level. And this leads to mistake number 4, which is when Kogan was down 30% and when it was gradually falling, I thought to myself, okay, surely it can't go any lower. So I made the same mistake that I did before with Waddle Health and bought again and just doubled down on my position. Now, I just want to say that if you believe in the company and its long-term growth proposition, then it could be a good time to buy the company at a discount. But me being a noob, a few months later, I just couldn't take it anymore, and I sold a few times at a loss of a few $1,000s each time. And I wasn't really thinking about the long-term growth prospects of Kogan and what this company could actually become. I mean, just look at it now. By the way, just to put everything into context for you guys, Kogan at the moment is trading at around $21. If it fell 70% over the next 7 to 8 months, like it did previously at that time when I was trading, and the trend was negative and they had announcements which investors hated and they just pushed the company down and down, and it was trading at around $6, would you guys still hold onto the company? Because at the time the share was dumped really badly, and sadly I was thinking with emotions. And that was just so shocking because every morning I would open up my trading account and looking at the losses, I just wanted everything to just reset like it was at the start of 2018. But there are no reset buttons with investing, unfortunately. You just need to learn and just do better next time. Now, speaking of doing better, I realized that now, okay, I need to look long term. I can't just keep losing money like this. So I bought my very first ETF, thank God, ASX SPY, and I thought to myself, okay, the market generally trends to go up over the long term, and the trend looks like that it's going up, so it could be a good buy. So I bought some, and that was probably the wisest financial decision in the whole of 2018. And around that time, the market was falling a little bit, so I bought in. But then this leads to mistake number 5, which is I still didn't properly research the ETF that I was buying, because potentially there could be better options out there than just this ETF. But the worst thing of all is that I only bought this ETF like once. I didn't bother to regularly buy into it every single month or every single fortnight and let my returns compound over time, because if I just kept buying it regularly since then, I would have actually had a decent capital gain by now. And at that time, I was basically trying to time the market, which is just so silly. Now guys, I look back at those times and I was just buying and selling 1,000 shares of Afterpay at a profit of like just under $300, and those same 1,000 shares would be worth around 140k right now. Like, that's just mind-blowing. So this leads to mistake number 6, which is not really realizing the value of a company, because at the time I knew Afterpay had huge potential, and this was around the time they were just about to launch in the US market, and I was only really after the quick profit and not really realizing what I actually did. So out of all my mistakes, I would say this is probably the worst one, which is just trying to make quick profits and not looking at the long term. Last and final mistake number 7, which is not looking at cheaper brokerage options. NabTrade and any Big 4 bank broker for that matter are super expensive. No matter what you're trying to do, if it's regular trading or if it's just passively investing, these costs really eat into your gains, which is why I have now switched over to SelfWealth, because they charge a flat $9.50 fee no matter the trade size, which is much better. If you're interested in this, there's a link in description to get 5 free trades, and I'll get 5 free trades as well if you're interested. So thankfully, I'm not the same stupid teenager that I was back in 2018 when I first entered the stock market. And I've learned a lot since then, and this video was only part 1, which goes into the mistakes that I've made. In the next video, which is part 2, we will look at all the stuff that I've learned as a result of these mistakes. So keep an eye out on that. I think it'll really put things into perspective. If you guys enjoyed my misery or learned something new, please drop a like or subscribe. It really helps out. And I'll see you in the next one. Bye-bye. So basically I bought